Doing my slide? Hi, everybody. I'm Joyce Kim. I'm the executive director of a tech nonprofit called Stellar.org. And what we do is we actually focus on bringing financial services to everyone, including the poorest of the poor, by actually building global public infrastructure for financial transactions. So I'm here to talk to you guys about money and finance, two fairly impersonal topics. But starting today, I want us to think about the world's financial infrastructure in a different light. And I want us to think about it in the context of people, because this is really all about people. This is actually not fun. I want us to start thinking about FinTech as, actually, my slides are not advancing. I want us to start thinking about FinTech as a way to unlock the economic potential of people all around the world. So to begin, I'm actually going to tell you a little bit about myself, a bit of a personal story as to why I am passionate about financial technology. So there have been two major influences on my life up until this point: my education and my family. So I went to a public high school in New York City, 35% graduation rate. 35% of us graduated. There was also a significant number of undocumented students in my classes. And in the years that followed, I had a piece of paper, my citizenship, that allowed me to go to college. It allowed me to go to law school. It allowed me to become a venture capitalist and be the person that's standing here in front of you, whereas my friends who are just as smart as I were not able to have access to that. And it's this randomized access system that has left so much talent untapped. And then the other big impact on my life is my family. My family left Korea at a time when Korea was going through this massive industrialization, and Korea has become this amazing contrast between the old and the new. And in the old Korea, where my grandmother was raised, women didn't have an economic identity. They didn't have their own money. They didn't have a chance to make decisions about what was going on in the households. And a lot has changed since then, but that system left half of the country's brain power also untapped. So since then now, Korea, we have our first female president. And although some of these problems may seem like from an era past, it actually is a reality for most of the world. Today, women globally are unbanked at rates far higher than men. And what this means for the future in the world is it makes it very difficult for us to advance when the world's biggest investors in the health and education of our families, women, are not financially served. So putting these two experiences together, I became more and more interested in what financial technology can do for us, and I became more interested in using FinTech to move the world from a system of randomized access to a system of universal access. FinTech is the most powerful tool we have to impact our future. Financial access is foundational. Without financial access, you cannot pay for health care, you cannot pay for housing, you cannot pay for education. FinTech is actually the tool that you can give to people so that they can independently improve their lives. So why wouldn't we want everybody in the world to have this tool? So I want to take a closer look at money. There's three basic categories of activities that money allows us to do. The first thing is that it lets us deposit and save. For most of us, that means a savings account, right? We go through our lives with our banks, and as I go through these examples, I want you guys to think about how you would handle this if you only had cash and your cell phone. So if you only had cash and your cell phone, how would you actually save your money? Like most of the world, you would do this. You would hide it in your house. You'd put it under your bed. This is actually the most common form of savings in the world. In other parts of the world, community models have developed, such as this one over here. This is a susu collector. They're essentially community mobile bankers, where they go around and they take daily deposits from their customers to keep safe, and then at the end of the month, they return it, minus 1 day's savings as a commission. This is another answer to savings account. And if we continue along the world, you'll find this. If you have money to save in Nicaragua, you buy a pig, or you buy livestock. This is the original piggy bank. So what if savings accounts were available to everybody? What would the world look like? To have this, we actually need an open system. And this small change would have a massive impact. So we're all familiar with that term. 2.5 billion people in the world live on under $2 a day. But what does that actually mean? Some research done by the good folks at the Gates Foundation have shown that the majority of that population is actually not statically poor, but they're intermittently poor, coming in and out of poverty. And the #1 cause for plunges back into poverty is a healthcare crisis, where the cost of preventative medicine or healthcare is about $1 to $2. That's it, $1 to $2. So what if we had a savings system that allowed people to make regular micro deposits, 10 cents, every other week. That one change could have a profound impact on over 1 billion people in the world. Our current system does not allow us to do this. The next thing that money lets us do is it lets us send or pay for things. PayPal, bank transfers, wire transfers, we're all familiar with this. These tools we take for granted. They allow us to shop online. But the emerging markets, people don't have bank accounts. They don't have credit cards. So in that case, how do you pay? You go to the store and you're actually paying cash. And we've heard from a lot of our users in Indonesia, the price differential between online payments and in-store payments is 40%. So cash is actually not that efficient, both in terms of cost and the time it takes to go to the store. It's also not safe. You can lose it. You can get mugged on the way to the store. But what else is broken with sending? How do you send money to your family if you only had cash and your cell phone? You could mail it, or you could use other remittance services. And for most people, that means something like a Western Union. Now, the impact of remittances on the world is huge. Last year, it was $500 billion alone. To put that in some context, the magnitude of that is 3 times all of the world's global aid. If it was a country, it would be the 22nd largest country in the world. So what if it was actually easy to send? If it was easy to send, then we could unlock economic resources in the world, but it requires low-cost infrastructure. If we had low-cost infrastructure, a 5% change in the cost of remittance fees would save the world $16 billion. With more accessible digital payments, people would be able to buy and sell things online, and then the economy of the internet would actually grow faster than anything that we've ever seen. This is the last category of activity that financial infrastructure allows us to do. It allows us to borrow and insure, and this is something that we're familiar with. We take loans for school, for housing, to start our companies. We also get insurance to mitigate risk, healthcare, home insurance, car insurance. But credit doesn't work the same all around the world. If all you had was your cash and your cell phone, how would you actually be able to prove to somebody else that you were creditworthy? In many parts of the world, people don't have enough of a verifiable identity to show that they are worth loaning money to. And to respond to this, microfinance organizations have created these community models to help deal with this lack of identity. They'll loan to 3 individuals at once under one loan in a community, so that if one person defaults, they screw over their 2 friends, and that drastically reduces the amount of defaults. In Nicaragua, a beautiful country in Central America that has this long coastline and these beautiful fishing villages all up and down, their fishing crews essentially use a model like this to deal with their crews. One person will get a loan for the nets, somebody else will get a loan for the boat, somebody else will get a loan for the motor, and then they come together to form a fishing crew. But this limited credit limits their ability to expand their businesses. So what would the world look like if everybody had right-sized credit? What would it look like if everybody could get a loan for exactly what they were able to contribute back? This would require a global form of financial history. This tool in particular is really important because this is the tool that empowers entrepreneurs. Not just us, but people all over the world. So let's think about how we can unlock more lending capital. How about we build an even more global peer-to-peer lending system where somebody could take a loan for $100 by borrowing 50 cents from everybody in this room? I would lend 50 cents. I assume that most of you would as well. How about we increase the ability of women to get loans by creating a system that allows them to use their household history as their own individual history when they have not had an individual history? So why does this term that I use, unbanked, exist? It's because there's fundamental costs in the infrastructure. There's cost to print a card, there's a cost to do compliance. And I've heard from various bankers around the world that it ranges from $20 to set up a bank account up to 400 pounds. So when a customer doesn't generate enough revenue to pay that back, why service them? If they don't have an easily readable financial history, why lend to them? This is why there's unbanked all over the world. So today's internet infrastructure is pre-internet. It doesn't work effectively. It's slow. And I think that it's actually time that we work together to give the financial system a giant upgrade. But what do we need to make this happen? We've already covered a number of them. We need open access so that people can save. We need low transfer costs so that people can send. We need financial history so that people can borrow. And to this list, I actually want to add 2 more things. I propose that the system interoperate globally. And this is because having a shared infrastructure allows us to bring the cost per transaction down even lower so that it is possible to serve even the poorest of the poor. And then relatedly, we have to have the ability to support microtransactions. And these are all design components that we've implemented in Stellar. And that's why we're building a back-end open infrastructure that is like TCP/IP for the internet, but for money, that allows people and fintech companies to connect directly. But what do we need besides the software to move to this new system? It's a big task. It's a hard one, actually. And we can start with a small mental step. It's a small step that we can all here start working on together. From today on, I want us to think differently when we read these stories about fintech in the Wall Street Journal or in The Economist. I want us to no longer think of it as euros and dollars and cents. I want us to think about it as people, right? Because fintech is actually the most powerful tool we have to let people work for themselves. This is not about charity. This is about creating efficient economies all around the world. Why do I care about this? Like, why should any of you sitting here in the audience care about this? It's because we're at this point in the arc of our history where the next Einstein is probably not sitting in the classroom at Harvard. The next Einstein may be sitting in the countryside in India, or maybe sitting in the favela in Brazil. And it is really important to the health of the world that we give everybody the tools to empower their own lives. If we had a robust and secure financial infrastructure that functioned like the internet, then we would allow our economies to grow as quickly and as widely as the internet allows our knowledge to grow. So with that, I just say, let's start reimagining a new financial system, because as the theme of the conference is, this is only the beginning. Thank you.
Thank you, Joyce. Welcome, everybody. We're going to discuss the future of financial services, following on from where Joyce left us. Thank you, Joyce. That was a wonderful description of all of the things that are possible, where it truly is only the beginning. You've met Joyce, so if I can, let me just introduce my 2 other panelists. You have James on my left from Funding Circle, which is the globally leading marketplace for SME loans. And the disclosure is, I'm from Excel, and we're a very happy investor. And then you have Taavet from TransferWise, which is a company very much redefining the multi-trillion-dollar global money transfer business. 2 of us are based in London, 3 of us are based in London. So I think there's going to be a lot to talk about. Before I start, I just wanted to ask the audience a couple of questions. First, how many of you, and please, I know it's afternoon time, but please try and raise your hand if you can do that. How many of you are either dissatisfied or really very dissatisfied with your current bank or your banking service provider? Wow. And how many of you think that in the next 5 years, you're going to be replacing your banking provider with new service providers, be they challenger banks or, by definition, new startups? Okay, we have a very forward-looking crowd. If I say 10 years, I assume almost everybody puts their hands up. So I think that's a great opening in terms of what's entirely possible. There's a great set of customers here. I have a question around market timing. So I think last year, financial services, fintech companies, as we call them, raised something close to $7.5 billion. That's 5 times more that was raised in 2010, just 5 years ago. Why now? Why is the next great set of companies going to be created in the next 5 years versus 5 years ago or 5 years after? Why now? I don't know, James or Taavet, whoever wants to take it.
Can I ask the audience another question?
Yeah, please. Let's just keep doing that.
So how many of you have changed your bank account, say, in the last 5 years? Okay. So that is higher than the average.
That's very high in Germany. I mean,
so in the UK, the joke runs that less than 10% of people change their bank account in their lifetimes. The divorce rate's 40%, right? So you're more likely to stay with a wife than the bank account. So, if you think about why the time is now, I think there's 2 things that stand out for me. There's inertia within people, maybe not everyone in the room. That makes sense. We are meant to be the innovators. And then the other side is transparency and trust. if you go back kind of 10 years, I think if you looked at any surveys of what people trusted, people would say, yes, I trust my bank. And now, because of the financial crisis, I think people don't trust their banks as much as they used to. And that's really down to the opacity within the banking model. Like, people don't know what happens inside banks. And we're trying to resolve that by making that banking model much more transparent, so you can see what happens to your money. And if we can do that, we believe that the time is now, and it can take off. So for me, it's about trust and inertia. I don't know whether you have kind of a different perspective on the same question.
I totally agree with that, but I think I would add maybe a couple more layers to it. We've seen over the past 15 years as the internet has changed a number of industries. Music industry, telecommunication, and so on have changed already thoroughly. And now we're getting to the point where there's a few industries remaining. So finance hasn't really been touched. Transportation hasn't been touched. Uber is doing great. Health hasn't really been touched yet, and so on. And what's happening now is consumers have gotten used to services which are much faster, much cheaper, and much more transparent and easy to use in all of these industries. We expect phone calls, to be like Skype, free, and video calling works immediately. We have access to all the music in the world. And so now consumers are going to the banks saying, we want cheaper, faster, and more transparent. That's kind of one side of it. Then another side of it is that what happened during the financial crisis is that banks lost out on a lot of trust. I'm pretty confident that before the crisis, the bank trust ratings were way higher than they are today. So now banks have lost out the trust, and people are demanding much better services. So I think this leads to the fact that also the banks are in a situation where they don't really have the capacity to work across all of their services anymore. We're already seeing how investment banking is being chopped away from banking. And now we're seeing how you and then Lending Club, you're chopping away the lending part of banking. Then we're taking away money transfer from banking. Other guys are taking away wealth management. So I think the banks are in a really bad position. They've lost out on trust, which was entirely their fault. And now people are chipping away at their businesses, one inch at a time.
So that's all well and good, but why should I trust you? So how do you get started? I mean, both of you are quite successful, great companies. How did you get started? How did you get the first set of customers, the early adopters, to really trust in a market where it's completely clouded with distrust because of all the history that you just talked about and all the baggage?
The best reason to trust is by a company having lots of happy customers. So we take lots of pride in servicing our customers in an incredible way, and we have an NPS score of 80 to prove that. And as a result of that, we're seeing that our customers are inviting their friends in dozens. And I think that's the best reason to trust a company. If you see that that company has lots of happy customers, you can go on our Trustpilot review page, and we have more than 10,000 reviews which have a rating of 9.7. If you go looking for a bank, you'll see them with a rating of 4.3. So I think having customers which use the service and tell their friends is the most important reason for trusting. And there's lots of other stuff like regulation and investors and so on, but customers is the most important one.
But what about price? I mean, so what is the hook? What does the hook have to be for me to not use HSBC, which is terrible, by the way, and use you to transfer money to India? What besides the fact that I read you have happy customers, how good does the hook have to be for me to say, okay, I saw an advertisement, and now I'm going to send my money through TransferWise?
We're much lower cost than HSBC. Typically, we're about 10 times cheaper than your bank.
10 times cheaper. Okay, thank you.
We do it quickly. Your bank might hold on to your money for 3, 4, 5 days. We get it done in a day, and we're constantly looking at how can we do it quicker. In the future, we'll definitely see instant transfers. And last, we actually make it really easy to use. So we put lots of effort into making sure our services are state-of-the-art usability. You can use us on a mobile, you can use us on your computer, and I think you will find the experience much, much easier than using your bank.
Is mobile a big piece of your business?
Mobile is pretty chunky. Our customers are transferring very large amounts of money. So the average is about £1,500, but we usually see transfers of tens of thousands. We have £1 million transfers. I don't think people are yet ready to make a £20,000 transfer on a mobile, yeah. But for smaller amounts, we're seeing lots of activity.
And James, what's your hook? How do you get me to invest as a retail investor on your platform? to choose an SME to give a loan to, essentially?
Yeah, so for us, I think trust is a huge part of what we do. We're essentially asking people to lend money and take risk on. So our commitment to everyone who uses the service is absolute transparency. So you can see the credit quality of the loans, you can understand how they change over time, we give predictions, tell people how good we're doing it. And it's very hard in the early days because you don't have that history. We are a marketplace, and what we, our job is to price risk, essentially. And if we can get that price right, then people understand that, they can understand the better returns, and that's why growth kind of exponentially gets better. On the small business side, 50% of the registrations by business owners on Funding Circle are in hours when you couldn't get a meeting with your bank manager. Banks are not flexible like that. Typically, it can take, in the UK, 8 to 12 weeks to get a bank loan. It may take you 3 weeks to get your first meeting. And through a service like us, you can get your money within, a matter of days. So it's much, much quicker. I think there's a difference as well, certainly in what we do, which is kind of marketplace lending versus a bank model, which actually we believe gives us an advantage, which isn't necessarily seen by the business. So when a bank's obviously lending to a business, it has to hold kind of capital against that. And therefore, that means there's certain types of businesses where a bank has to hold a lot of capital, and the regulator quite rightly says they have to hold capital because they're offering this pretty much zero-risk banking product, a savings account on the other side. And what that means is banks have to say no to a lot of businesses. Even though, like using big data, crunching that data, you could lend money at interest rates of 15%, so I'm not talking very high, but because of the way the banking model works, that's not fit for purpose for every business. And that's not the fault of the banks. That's us as consumers demanding that we want a zero risk or a very low risk type of investment called a savings account. And the question you have to ask yourselves, in a world of more and more data on the internet, can we price risk of small business loans? And if we can do that, that 12% of capital that a bank has to hold in case, bad times, is that efficient? And therefore, should we pass that savings on to kind of businesses and consumers? And that means we can approve more business loans because we're a marketplace and we can price the risk better. So our sell to business owners, our vision is we can help more businesses that come to us than a bank could do because we're better at pricing the risk. And ultimately, rather than having one lender, being that bank, we operate a marketplace which has thousands of different lenders, whether they're the government, whether it's a hedge fund or people, whatever it is. So I think if we can do that, why would someone go to a bank? Because the bank can say no, whereas a lender might say no on the Funding Circle platform, but someone else says yes.
It's fascinating, and it's not going to be getting any more easy for the banks given the requirements on regulatory capital. But regulatory is my favorite topic, so we will get to that. Yep. Before we do, Joyce, you, from what I understand about Stella, the thesis is that it's based on trust between entities called agents. That reminds me of an age-old system called the Hawala system, which we grew up with in India, which was informal agents who acted as sort of trustworthy agents with each other, and then you had to trust them in one country, and the other country, you had to trust the agent in that particular country. How, in this day and age, do you think that that's going to work?
So I believe that the fundamental use of money is very cultural, right? The way I split a bill with friends here may be different than the way I split a bill with friends in Seoul. And our feelings about money are actually localized to quite an extent. So to the extent these technologies can be designed in a way that actually reflect people's cultural values, it's actually a stronger system. And it's easier to get over these trust issues and sign up customers when you're not actually trying to bring them to an entirely new trust model. It's better to match it to with what's already there.
Fascinating. Okay, so we're going to go back to the past before we go to the future. So just to talk about regulation, because I think all of you have hinted on it in some sense. One of the great things about being a startup today is you can get an MVP product and you can go live and you can test and iterate. It's not that easy to do that if you're a startup in financial services. You've got to dot the I's, you've got to cross the T, you've got to worry about KYC, you've got to worry about capital adequacy, regulatory capital, minimum ratios, etc. So how do you think about building the business with this sort of the requirements of regulation? Do you resent it? Taavet?
We've actually taken an approach that regulation is a core part of the business. I think there are different ways you can do it, and if you look at the Bitcoin world, for example, then I think a lot of people are trying to avoid or go around regulation, but we've knowingly decided that it makes much more sense for the business to embrace regulation and take it as a core part of what we do. So we are regulated by the FCA in the UK. Every other market we go to, we're working with the regulators to get regulated. And I think you can actually learn to live with that and take it as just a part of your business. And you have to do certain things differently, but it's, if you embrace it, it's not going to be too much of a nuisance. I think the problem is if you ignore it, then it can come back and haunt you. But at the same time, I think we are seeing that there is lots of regulation where the regulators need to move a bit faster and think a bit more modernly. So if we think about everything in KYC and AML, for example, why the hell do we trust a paper-based phone bill in this day and age? 60 years ago, maybe if Xerox machines weren't around, it made some sense. But nowadays, my Facebook profile is probably a much better source of KYC than a copy of my phone bill. So I think lots of stuff like that is where it would be great to see the regulators move a bit faster and think more about think about things from a user point of view. But sadly, regulators aren't really being paid to innovate. So I think it'll take a while until we can move on these things. But until that, we embrace it and we work with the regulators to make sure that we follow what's important for them, and at the same time that we can offer a great service to our customers.
How about you guys?
So I guess we're in a unique position at Funding Circle. And many people in the room may call us crazy for doing this, but we actually lobbied the UK government to regulate us for 2 years.
Why did you do that?
Because we're crazy.
Yeah.
I think it's because, well, there's no doubt in our minds, if we can wind the clock forward 10 years, there's going to be billions of pounds in the UK, there's going to be billions of dollars in the States where we're now as well, and probably across Europe, of money going through these platforms. So you ask yourself the question, will it be regulated at that point? And you think, should the consumer be protected? And the answer in our minds was yes, definitely. So, do you want to walk into that and, have the regulation put on you, or do you want to work with the regulator? Do you want to be progressive and go to them and say, this is what we do, explain the ins and outs, and educate them? And that was, our approach to doing it. And I think, it's been a challenge working with the regulator to get them to understand the business and build up a whole framework around it. And now we just signed that off with the UK. We're starting exactly the same conversations with Europe. So regulation seems to be something that we wanted to address early, but it's something which never dies. That new geographies have different things. But at the end of the day, it's there to protect consumers. And if you think our businesses are going to be successful, then we have to be regulated.
And cryptocurrency and regulatory, lots and lots of conversations. And I know you're just a protocol, and applications have to be built on top of Stellar.
Correct.
What's the view of Stellar, and where does regulatory help? And how do you think of different countries and the fact that you have to overcome regulatory battles in countries as far and wide as Korea and Vietnam for Stellar to be successful?
So the regulatory battles actually have to be built by the individual companies in their own local jurisdictions. What we can do is try to think of how do we design the protocol so that it is flexible enough to deal with the variety of regulatory regimes in the world. And I think the difficult task with the digital currency space is that I do agree with you that things, to the extent we have more clarity, the easier it is to do business and to know what everybody's interests are and who's being protected. At the same time, the underlying technology, the ramifications are still not clear yet in the digital currency space. So there's another side that also believes that we need a few more years to see how this plays out before we can get a grasp of how these technologies will impact the world. So I have a wait-and-see approach. We do hear different things from people from various governments. People in the developing world are very focused on how do they provide access to their citizens, because it is a massive blocker for economic development, whereas people in Europe or the US are much more concerned about AML issues.
It's fascinating how the divide will only get deeper. Yeah. And so do you think, for Taavet and James, do you think there's anything to be learned from the incumbents? Would you hire people from HSBC, from financial services, or really everything is new and there's nothing to be added?
I think we may have different answers on it.
You start.
I'll go first. So we think there's a lot to be learned from we think the way banks are run and banking models are incredibly inefficient, but we believe by talking to people who work in those organizations and are fed up with it, there's a lot of skills. So, for example, we have kind of a marketplace which prices risk and puts money out. We launched a property product earlier in the year, and what we did was make sure us being kind of technology entrepreneurs aren't property investors. So we wanted to make sure we had the best people from within the banking world who understood that. So we went and hired a team out of a bank to do that. We are partnering with banks now. I think there's been a growing up on both sides between FinTech companies and banks, and we have to, if we're going to hit scale, learn how we work with them. And I actually believe in a vision where banks will see it's more efficient for them to actually lend money through a marketplace such as ourselves to their own customers and have all the servicing, have all the credit assessment done through someone like us than through themselves. So I think what you'll see is us work more and more with kind of banks. I think we could learn a lot from banks. They've been doing it for a long time. I think by the same or the other side of the coin, there's a lot of other things that we don't want to learn from banks, but if we keep an open mind to it.
I can guess what those are.
Yeah.
Taavet, I want you to answer that question. Would you hire someone from HSBC?
We haven't hired anyone from HSBC, but I totally believe there are lots of smart people at HSBC, and
By the way, it could be any bank, not just
absolutely. And I would challenge them first that, hey, if you guys think about, if you really have your customers' interests at heart, then you think about partnering with us. I think any bank who wants to offer the best kind of service to their customers should think about having the TransferWise money transfer button in their online bank. So I think that's kind of proof to the pudding, since they're really thinking about doing something where they have their customers' interests at heart. When it comes to hiring people from banks, I'm pretty sure we will do it. I'm sure we'll meet people who come from a bank who are fantastic, and we see they have a great fit with the team. I think there are maybe more the ways how a bank operates, and then if you've been in a bank for a long time, I think it's hard to change that way of thinking and doing. For us, and I think for every startup, speed is most important. So how do you build a culture where people can execute that at a high speed, and how do you build autonomous teams where people aren't afraid to take risks? I think the way you work and attitudes are quite different in many banks, and that will make it hard for these people to find a home in TransferWise or in other fast-moving startups. But at the same time, I said, there are lots of smart people at banks, and first I hope they will figure out that it's a way to provide a great service is to partner with TransferWise, and then I'm sure we'll hire a few as well.
But do you think that one of the reasons there's such great companies like yours around is because the banks just haven't focused on these market segments? I mean, they haven't focused on the SME business. They're structurally not as capable of doing that. They actually make a lot of money on money transfer, don't they?
So, but let me challenge you. So you're saying banks haven't focused on lending, they haven't focused on wealth management.
Yeah, they haven't focused on SME lending. They make so much money on other parts of their business. They haven't focused on it. Money transfer, they could cut their rates. Let me ask you, do you think if a bank would get its act together, do you think they could compete with you a few years down the road? Because scale must matter. Cost of capital must matter. Or do you not worry at all?
I think banks need to, unfortunately, they need to go through their whole portfolio of services, and they need to modernize this. And I think that's a very hard task to do at the same time if you need to be deleveraging your business and you're focusing with your customers really being unhappy with you. So I think for them it's going to be a hard journey to go through their whole portfolio and to make this competitive. And that essentially means the amount of money a bank is earning is going to change a lot, because we charge 10 times less. So unfortunately, we're changing the profit and revenue pools in the industry. And I think banks today will not be able to work if they can only charge 10 times less, because their cost structure isn't going to work with that. So it's going to be a long and painful road for them to reinvent themselves. But I do expect they will reinvent themselves. I'm sure there will be some of the current best and global banks who will reinvent their services, and there are going to be new challengers. And all this means is there is a finite window of opportunity for me, for James, for everyone else to build their business to a scale where we can compete with the banks as an equal to an equal.
Before they get their act together.
Yeah. But we're speaking about 5 years. It's not going to be 3 years. It's 5 years, maybe 7 years.
I mean, I think for me, like banking is a cross-sale model. They want businesses to go into the branch. They sell them lots of different products. I mean, that's how banking model works. And I think what we're trying to do is disintermediate banks and actually stay focused. So, if you take a step back, there's, forgetting whether it's financial services, there's a disintermediation, strategy, and there's a cross-sell strategy. And I think that is kind of ultimately the issue. I think with businesses, some businesses will prefer banks because they want to go in and meet their bank manager. They want to really understand, the structure of a whole corporate finance package. And for those types of businesses, the banking model is better. What we're trying to do is use data to understand the risk of small businesses. And our algorithm could come out and say, this business should be priced at a 10% interest rate. He might go into the bank and he goes, well, my dad's a farmer and he's got this tractor out the back, and if he could secure it on that, could you give me 4%? And the banking manager goes, yeah, fine, I'll do that. So I think, what banks will become, is a kind of more of a non-standardized, approach where people do matter more. I think the thing that always surprises me in banks is banks spend more on technology than technology companies do.
But it doesn't work.
But it doesn't, and it's just crazy. And it's because they've been, going for so long and they're so big. And there's so many people invested in that. So, to the point of being undercut by a, there was a banker in the room. I'd love to know, like, what do you do in that situation?
I wonder what they say about TransferWise.
But I think, Sarah, maybe there's one more thing. Maybe we're going to see an end of universal banking. Maybe the idea is that you're going to go to a bank which will provide you wealth management, credit card, and so on. Maybe that's not going to fly. Maybe in the future, actually, people will go to Funding Circle or Lending Club to borrow. American Express already provides credit cards without, they might have a banking license, but they're not a universal bank. TransferWise will do money transfer. Wealthfront will do asset management. So maybe it's going to be the end of universal banking, and there's going to be specialist vertical technology companies who will provide all of the services, and they'll do it in a much better way.
Yeah, no, I can paint that picture. And Joyce, I'm going to come to you in a second, but does that mean, Taavet, you will only do money transfer for the rest of your life? You will be the money transfer company? Sorry, you just said that, so I have to ask you.
I'm going to be the money transfer guy for the rest of my life.
You are going to be the money transfer guy. But
and that's been my dream, always.
It's always been your dream at Skype. And what about you guys? You're expanding into property. How do you think about growth in your organization? Do you want to do the same thing across multiple countries? Or do you want to do multiple things for the same customer group?
Yeah. So we believe it's all in the customer.
I guess you want to do everything too, but that's later.
Yeah, that's 20 years now.
Yeah.
No, we believe in owning the customer. Businesses are all about providing the best service you can to that customer, making sure your reviews, as Taavet said, are as high as possible. So, our view is we want to know small businesses inside out, and if we can do that, we want to do that in different geographies. And we believe there's more similarities in doing that than there has been a product-focused company and saying, we're going to only be in one country, but we're going to serve consumers, we're going to serve businesses. You mentioned property. We believe small businesses are lots of different types. You could be a transportation company, or you could be a property developer. But I think the way they behave and the way we have to kind of get them through a funnel is ultimately the same. And we had a lot of conversations so far about taking share from banks. We actually believe that we are growing share. If you look at the net lending to small businesses in the UK alone, Funding Circle's marketplace is the 4th biggest net lender to SMEs in the country. We've only been here for 4 years. Now, clearly, you've got banks like RBS who are taking more money out than they're lending, and they're still lending billions, whereas we're not. But you can see, like we are lending more, and I think that's because there's different types of businesses, and it's like Joyce was talking about with the unbanked population. There's a perception that unbanked must mean it's high risk. It's not too high risk. It just means that the banking model can't price that risk correctly. So we believe there's a bunch of businesses who the banking model doesn't serve, either through regulatory reasons or because they want the money quickly, or they just, they'd rather take the money from friends and family than go to their bank. And by doing that, we can then kind of increase the market as well. So it's not just the share game. It's about kind of growing the overmarket. Yeah.
And so, Joyce, do you think that fundamentally it's the emerging market countries that are going to figure out the banking services for the masses?
I think the emerging market and the next billion people on the internet will change everything. not just banking, but surely banking as well, because that is the first step to changing everything else, like healthcare or education or all those other different things. I think in the developing world, what we'll see is the communities there will just leapfrog us. It's not that they're going to come behind us and follow along. They will just skip over where we are, and we see that as this is the patterns of how innovation happens. So then the question is not what is the incremental change, what will that massive change be, and when will it happen?
Which happened in payments, right, with M-Pesa, so I guess stay tuned. One sort of last theme that I wanted to just ask about, because I'm based in London and I'm an investor, so I have to talk about how Europe is fantastic. Can you just talk about, and then maybe you can contrast it, what was the benefits of being based in London to found your company versus starting out perhaps in the Valley? Because we've heard a lot about the negatives of starting a company in Europe versus being in the Valley. I'd like to hear kind of whether you think there's an opposite side of the coin on the FinTech side.
I grew up in London, about 20 minutes from the office, so it was an easy place for me to start. But I do think, London is a financial capital, and that means whether we're going to talk to hedge funds or institutional investors who want to lend through the platform, they're only a short ride away. Yeah. So in terms of educating them, it's much easier. Also being close to kind of like a regulator who's very forward-thinking, because it's heavily regulated markets, it's that's like, if you want to be global, where are you going to sit? Like, we wanted to take the UK market on, and we couldn't do that at San Francisco because we had to work with the UK regulator. So for us, it was like, what market do you want to address first? And we thought there's better credit data in the UK, there's better kind of a regulatory environment, and therefore the UK made sense. We have launched in the US, so we're in San Francisco as well. And we bought a business out there, and I think it's a fantastic environment. The challenge is, you could say, there's a great engineering pool over in the Valley. Engineers are formidably expensive in the Valley as well.
Yeah.
So, London, as long as you can get them in, is a fantastic place for that as well. But Taavet didn't grow up in London, so he might have a less of a
Estonia
bias.
to London. Any benefits?
So I think being in London is really, one thing was very important is we have a government who's been listening to the startups a lot and the regulators. So having that, I think, is very helpful. Next up, for FinTech specifically, I think London is unique because you have lots of financial knowledge coming together with technology. New York has the financial knowledge, but not the tech, and California has tech, but not the financial knowledge. So I think that's pretty important and unique for FinTech. And lastly, I think London is a great place to be headquarters for a global business, because I can jump on a plane and in 12 hours I'm in California, 12 hours I'm in Singapore. Try flying from Singapore to California, it's really painful. So I think London is pretty good for running a global business.
I have one question. I'm sure I'm going to be harassed, but what's your favorite company other than yourself? And I'm not allowed to say in financial services.
In financial services?
And you're not allowed to say Stella or TransferWise.
For me, it's a company called OSPA.
Okay.
I think what they're trying to do is actually incredible. So they're trying to create an app to help children understand the value of money. So parents can look at it, they put the pocket money on the app. I think there's a card attached to it as well. They can go and spend it, and they learn that. Going back to that stat I said earlier, that in the UK at least, people don't really switch their bank accounts. I think the play there is they can better educate young people, but then they can keep them through their lifetimes as well. So for me, I think it's an incredible business.
Financial services for kids. Taavet?
That's a hard question. There's a little Swedish company called Mapillary, which is doing a crowdsourced Street View application. I think that's pretty cool because.
But that's not financial services.
Did it have to be financial services?
Never mind. I'll skip over you.
I think some of the most interesting stuff I see are people that in their FinTech companies and their social good corporations that are basically trying to figure out how to give savings accounts to millennials all across Southeast Asia. And I think that's really interesting because Southeast Asia, even more so than Latin America or Africa, is further along on the mobile kind of staircase, and things will move quite rapidly there. Everybody already has a Facebook account and a WhatsApp account. So once you put wallets in those apps, you'll see something totally amazing.
Great. Thank you so much for a great panel. I'll let you go, Taavet, so you don't have to answer the question. Thank you very much.
Cool.
Great.